Good morning, this is Bloomberg Daybreak Europe. I'm Tom Mackenzie in London. These are the stories that set your agenda.
I'm determined on running, but I think it's important that I allay fears by let them see me out there. Let me see.
Joe Biden vows to stay on in the presidential race, but two crucial gaffes at the NATO Summit deepen concerns about his mental and physical health. The yen whipsaws on renewed intervention speculation. That's after US inflation cooled to the slowest pace since 2021, with traders pricing in more than 2 cuts this year, while equity investors rotate out of big tech. And banks gear up for earnings season, with Citi, JP Morgan and Wells Fargo reporting quarterly numbers later today. We will tell you what to expect. Goolsby describing the inflation data out of the US as, quote, excellent. Are we now on that sustained path to 2% for the Federal Reserve? Certainly the market's pricing in, as we said in the headlines, more than 2 cuts now by the end of the year. 60 basis points. September, December. Bloomberg Economics warning that maybe July is a risk. That is not priced in by the markets yet. And rotation nation. That is the story of the US right now. We'll see if that theme continues with the moves out of big tech and into small caps. The Russell 2000 rallying as the Nasdaq 100 plummets yesterday, with tech falling quite significantly. So the moves into small caps, and we'll see if that theme continues. Currently, the FTSE 100 futures pointing to gains of 0.2%. European stocks set for modest losses of 0.1%. S&P futures flat as things stand. Nasdaq futures also pointing a little lower by 0.2%, again, after the losses of yesterday. Let's flip the board and look at US Treasuries with the move that we saw on the back of the inflation data out of the US, and again, at the lowest level in terms of core since around 2021. 421 yields down 7 basis points yesterday. Currently, not a lot of movement, bit of consolidation around 421 on the benchmark 10-year. We have an eye, of course, on the Japanese yen, on that speculation that maybe they intervened and lent into the strength that we saw yesterday for the yen on the back of dollar weakness. 159 currently on the Japanese yen. Brent at $85 a barrel, currently up 0.2%, and gold at 2,409. We talk about the earnings season leading out to banks. We have one of the big European corporates in the telecom equipment space reporting right now. Ericsson, second quarter net sales coming in at just shy of 60 billion Swedish krona. The estimates had been for 58.5 billion, so a little bit above the estimates on the top line for Ericsson. Second quarter adjusted EBITDA coming in as a solid beat as well. 3.2 billion Swedish krona. The estimates had been for 2.7 billion. Ericsson saying that market conditions will remain challenging this year. They have that deal with AT&T. They've been cutting costs, even as demand for maybe some of their equipment around 5G is a little softer than some had hoped for. We'll get more details on that, of course, throughout the next few hours. Let's switch focus then to what we've been hearing from the US President Joe Biden, vowing to stay in the presidential race. 2 critical mistakes, though, deepening concerns about his mental and physical health. Speaking at the NATO Summit in Washington, Biden mistakenly introduced Ukraine's Volodymyr Zelensky as President Putin.
Now I want to hand it over to the president of Ukraine, who has as much courage as he has determination. Ladies and gentlemen, President Putin. President Putin. He's going to beat President Putin. President Zelensky. I'm so focused on beating Putin, we got to worry about it. Anyway, Mr. President.
I'm better.
You are a hell of a lot better.
I mean, it's painful to watch, quite frankly. Let's bring in Bloomberg's John Harney in Washington. John, what does this tell us about where Joe Biden stands in terms of this campaign? This presser was crucial for him, seen as crucial, certainly. A lot of scrutiny. He fielded a lot of questions with skill. But then, of course, he came through with these gaffes. Where do we stand in terms of Biden's campaign?
Well, it was, as they say in the theater, a mix, an uneven performance. He at the very beginning of the press conference after the Zelensky-Putin business, he mistakenly called his vice president Trump instead of Harris, which of course got a lot of caused a lot of fresh concern among his supporters. Then he went on, though, to answer a lot of questions about very detailed issues with some confidence and authority. And did he reassure enough people? That's the question. Right afterward, Congressman Jim Hines, a fairly prominent Democrat, announced that he too was joining the chorus of lawmakers on Capitol Hill who are calling for him to step aside.
What is the next litmus test then for Joe Biden, John? I mean, he acknowledged some of those concerns, and I wonder if that is a president at least giving some suggestion, giving some space to the optionality around stepping away from this at some point. What is the next key test for this president? Yes,
he did. That came toward the end of the press conference when he acknowledged that there was a lot of anxiety over what happened in the debate now more than 2 weeks ago, and that he has to, as he put it, allay those fears. He's going to go to Michigan today, a battleground state, and campaign in Detroit. He also admitted that, or acknowledged rather, that other Democrats could beat Donald Trump, and that if this is sort of a hypothetical, he might consider stepping aside if it were proven to him that he couldn't win the election. But then he said it's not going to happen. So we're more than 2 weeks later, we're still in a state of some, I don't want to say chaos, but disarray in the Democratic Party, as the Republican convention is about to take place in just a few days. And Donald Trump, of course, was gleefully highlighting the mistakes that Biden made. OK, Democratic disarray. We look ahead to that event, of course, out of the Republicans. But before that, of course, the campaign event, as you said, for the US president. John, with the latest and the analysis in terms of the details coming on the back of that press conference. John Harney joining us from the US. Thank you very much indeed for the latest. Let's go over to Singapore right now. Avril Hong standing by with a check on the Asian markets. And top line, there's a bit of pressure coming through for Asian stocks. Avril.
Oh, absolutely, especially the tech names, mirroring the performance on Wall Street, where investors were leaving the safety of the big tech trade. Today, it is the chip names that are the biggest drag on the stock gauge for the region. The Nikkei, the TAIEX, the tech-rich gauges are the ones that are declining by the most. The Nikkei getting added pressure, a bit of a further headwind from the sharp moves we saw in the Japanese currency. Remember, export-related stocks don't like relative strength in the yen. We're also seeing, interestingly enough, ahead of the third plenum next week, the Hang Seng is an outlier, climbing 2+%, helped along by gains in the Chinese tech names. Maybe there's some optimism. We'll see a bit of stimulus coming through from Chinese authorities. Flip the board, because certainly the Chinese economy looks like it needs it. If you take a look at the trade numbers, looks really good. Take a look at how it was a big beat. But the imports, the unexpected falling, that was cause for concern, just exacerbating the weak domestic demand narrative. The trade balance, highest for the surplus since 1990, just shows you the imbalance in the Chinese economic recovery. Weakness still on the offshore yuan, despite initially climbing about 0.3%. And this was in the wake of the US CPI print. Let's flip the board, because the yen, of course, is also in focus. That sharp move from the 161.6 level pre-CPI print towards the 157 level. That really sparked that intervention chatter. Potentially, Japanese authorities had stepped in. Maybe they did, maybe they didn't. We'll only find out at the end of the month when the next available monthly intervention data comes through. But if they did intervene, it's worth noting that it wasn't terribly effective. If anything, it was very short-term effect, because the yen now sitting well above the 159 level again. Tom.
Yeah, 159.10, as you say. A little softer so far in the session, about 0.2%. Avril Hong with a check on the Asian markets. Thank you very much indeed. Joining us out of Singapore. Let's stay on the question of the yen then, because the Japanese currency, as Avril was saying, whipsawing then as so-called rate checks by the BOJ added to speculation of currency intervention. Let's bring in our MLive strategist Mark Cranfield for more on this story. Mark, talk us through what the game is that officials in Tokyo are playing right now around this Japanese currency. Speculation, they lean into the strength that we saw yesterday on the back of dollar weakness. They haven't confirmed anything. What is your take in terms of how traders should be positioning around this currency? How much further does it have to run at this point?
Yeah, I think it's going to run a bit further. They're being pretty coy, as you say. They don't want to confirm that they were involved last night. And the rate checks today, the significant thing was there, it wasn't only dollar yen, it was also euro yen, which they were checking as well. So that tells you that it's an overall concern about the yen. It's not a single currency situation. So that probably tells you that whether they actually did anything last night or not, they probably have something up their sleeve. Now, don't forget, it's 3 weeks until the next Bank of Japan meeting. There's a lot of speculation going on that now the central bank will step in with an interest rate hike and a reduction in Japanese bond purchases. That will be seen as being supportive for the currency. But since they've got this window where they're a couple of weeks away, we've had a soft CPI print, as you mentioned earlier. This is an ideal window for the Japanese authorities to really push their advantage home. And we've seen them do this before. We saw them do that in 2022. That's exactly what they did. They used weak US data. There was a lot of optimism in the Treasury market that yields are coming down, and they jumped on it and they pushed dollar yen down a long way. Now, the situation is slightly different this time around, but certainly between now and the Bank of Japan meeting, it would make a lot of sense for them to continue to help to strengthen the Japanese yen. As it happens, Monday is a holiday in Japan, and the last time they intervened was on a Japanese holiday. So put two and two together, and traders are expecting more fireworks on Monday in the Japanese yen.
OK, it's going to be a busy period then for FX traders and you and the team, clearly. And you have to wonder whether you look back at this moment later on and look back as this potentially the pivot point for the Japanese yen in terms of moving stronger, given everything that's happening with the Fed and the pricing. We go to that story now because traders are boosting those bets then that the Fed will cut rates sooner after that inflation broadly cooled, as you mentioned, of course, Mark, in June. St. Louis Fed President Alberto Musalem called the figures, quote, encouraging, but cautioned that more evidence is needed that price pressures continue to ease. Let's take a listen.
This morning's CPI inflation for June points to encouraging further progress towards lower inflation. Notably, the core CPI increased just 0.1% in June, with a decline in goods prices offsetting a modest increase in services prices.
Mark, your take then on what this inflation data means for treasuries. To what extent is there going to be a further move into the front end? Is that the part of the curve that's most volatile to this kind of softer inflation data? We saw 7 basis point move lower on the 10-year yesterday. How do you read this and interpret this across the treasury story?
I mean, this is just going to fuel even more optimism for treasuries across the curve, not just for the short end, but the long end as well. We're almost back to the situation that we had in the first quarter. We started the year when Jerome Powell was very optimistic that inflation would come down. The market got a bit ahead of itself, priced in a lot of rate cuts. And at one stage, we had the 10-year yield below 4%. We're not there yet, but that's what traders can see. They can see how far the curve priced in the first quarter, and we're beginning to go in that direction again. As we noted earlier, they haven't quite priced in 3 interest rate cuts yet, but Jerome Powell speaks early next week, and he has that CPI report in his back pocket. He knows that finally the inflation numbers are getting into the point that he was talking about earlier in the year. He was a bit disappointed then. He also, since then, would have seen a few cracks appearing in the US employment situation, which were not there at the beginning of the year. So now he will be much more confident. When he speaks next week, he will be seeing that the economy is cooling in the United States, not fast, but it is turning. He's also got inflation going in the right direction. He's likely to sound pretty dovish. He probably won't promise there's going to be a rate cut in July, but he's almost certain going to give a strong indication that traders are correct to be betting that September is really on the table. A rate cut is definitely a possibility, and the Treasury market will go for it. So we would expect yields to decline again next week.
OK, always with the valuable insights and context on what is happening across these markets. M-Line Strategist Mark Cranfield, thank you very much indeed. Go and enjoy your weekend. Now, here's what else is on the docket then today. 1:30 p.m. UK time. We've been talking about the inflation data out of the US. We're going to be at producer prices, PPI. That's 1:30 p.m. UK time. So we'll see if that builds on the narrative of a more sustained move lower in terms of prices generally in the US. 3 p.m. UK time, University of Michigan's Consumer Sentiment Survey. We know that consumers are starting to feel a little bit more pressure stateside. We'll see if that survey bears that story out. And, of course, drum roll towards the bank earnings story. That all kicks off later today. And, by the way, we're going to give a preview of that story coming up. US banking giants JP Morgan, Citi and Wells Fargo kicking off earnings season later today. We will set you up for what to be scrutinising when those numbers drop. That is next. The preview on the bank earnings story. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Happy Friday, everyone. Now, shares of the biggest US banks have been on a tear this year, with all but Morgan Stanley outpacing the S&P 500. JP Morgan, Citi and Wells Fargo kicking off earnings season today, with investors looking past another projected drop in net interest income and instead focusing on investment banking and a rebound in loan profits. Let's bring in then Charlie Wells for the setup. Charlie, I love the fact we've all been obsessing about net interest margins, NIMs. But, oh, no, we don't care about NIMs anymore. It's all about investment banking because there are signs that maybe it's coming back. What are you going to be looking for in terms of the setup for these earnings?
Absolutely. So it's almost looking like we're going to enter a new era. Of course, we had that CPI number yesterday, which has got everyone talking about that potential September rate cut. And that has been a really positive momentum story for these bank stocks. So, the idea there is that could potentially bring some of those deals. We're already seeing a lot of deals happening, which translates to fees for investment banking for these banks. So that's a big one.
So that's part of the boost in terms of the story. And in fact, I was speaking to the international president of Bank of America yesterday, and he was saying, yes, he is starting to see that turnaround in terms of demand around capital markets and investment banking trading as well. So that sounded positive. What are the potential burdens for these banks then, Charlie?
So some analysts have been talking about how they're concerned about the consumer and that the consumer is increasingly strained. Even if inflation is cooling, there's still a lot of pressure here. We're seeing some signs of potential increased credit card delinquencies, and so that could potentially hurt some of that share price momentum. But also on these deals, some of these huge banks reporting in just a few hours have been talking a big talk about deal increases. So Citigroup reporting today said that the quarter could see a 50% growth in fees from investment banking. JP Morgan also reporting in just a few hours 30%. So they had a low bar because last year was so bad. But if they don't meet those expectations, that could spell trouble for them.
If we get a cut in September, and certainly the markets are now fully pricing that in from the Federal Reserve, where does it land in terms of this is good news or bad news? Net interest margins, not great it seems, but in terms of activity, in terms of generating, and you link it to the consumer. So how does a cut in September from the Fed, what would that mean for these banks?
That plays out in an interesting way. And I think for net interest, it could take some of the pressure off these banks who've had to increase the amount that they pay for deposits. So that could be positive on that front. It could take as well some of the pressure off of that consumer that we were talking about. And also, that just further bolsters the environment where companies feel like they want to do deals, and that keeps those investment banking fees healthy.
Bloomberg's Charlie Wells with a fantastic setup, as always, for the earnings season, with a focus, of course, on the banks. The three big names crossing later today, including Citi and Wells Fargo. We will, of course, be bringing all the details when those numbers drop. Charlie, thank you. Coming up, switching focus, because Kenya's president has fired most of his cabinet. That followed those deadly protests that you might remember, of course, in Nairobi against his tax plans that he then withdrew. We're going to get the latest in terms of what it means for that country going forward. That is next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, Kenya's president has dismissed most of his cabinet after deadly protests against his plan to raise more than $2 billion in new taxes. William Ruto had been trying to stabilise his government's finances and gain access to new funding from the IMF.
In line with the powers given to me by Article 1521 and 1525B of the Constitution, decided to dismiss with immediate effect all the Cabinet Secretaries and Attorney General of the Republic of Kenya, of the Cabinet of Kenya.
OK, for more on this story, let's bring in Bloomberg's David Malinga, joining us on set right now. So, David, thanks for joining us on set bright and early. Why did Ruto then dismiss his cabinet? What was behind this?
Thanks, Tom. So, the immediate answer is because the protesters demanded it. They have been on the streets for a few weeks now, demonstrating against a hugely controversial tax bill that sought to raise everything on taxes on everything from bread to even things like diapers. And they were not comfortable with this because the economic times are really tough. So they went to the street and demanded that he withdraws the tax bill, but also that the government goes. He withdrew the tax bill, which was in itself unprecedented, but he also, fired his almost entire cabinet. So the only person remaining at the top, at least, is himself, the deputy president, who is protected by the law, and then the prime cabinet secretary, who doubles as the foreign minister. So it's quite unprecedented in a way. We don't see, such things usually happen.
Yeah, this is not something that happens on a regular basis in Kenya. So it's important to put that context out there as you do. What are the next steps then? What are the next options for William Ruto?
The challenge he really has now is to devise a path forward that balances him not going back to the economic hole he inherited, as well as finding jobs for many of the people who were on the streets. As you might remember, when he came to power, the economy was really in a bad state. It was heavily indebted. It was in distress, really, at the time already. The currency was tanking. There were net flows from the stock exchange. And he told people that it's going to be tough. Well, I fix this. Bear with me. But I think he stepped on the gas a little bit too much in his fiscal consolidation plan of raising revenue, asking people to pay more at a time when it's really tough.
What does it mean, then, for the economy going forward?
It might probably slow. I mean, the IMF came out yesterday, and as you know, the IMF is an integral part of this story. It came out yesterday saying that they're discussing with the Kenyan government and they could find a balanced path to take things forward. But whatever they do, it looks like the economy might slow, because if they don't spend as much as they set out to do, I'll give you an example. He had set out to spend a lot of money on his housing program, which means not only providing a lot of affordable housing, but also getting lots of people jobs in the housing sector. He had planned to increase money for the universal health program. If these things don't happen, and depending on how he restructures his budget, the economy could end up slowing. But the most important thing is what really happens to the debt. Is he going to borrow more? Because investors were concerned when you just come in about Kenya potentially defaulting and following Ethiopia, Ghana, Zambia, and some of the other frontier markets in Asia. Whatever they do, will they still inspire confidence in the markets that, that Kenya is going to get it right?
Yeah, and of course we saw the credit ratings, or at least one of them, downgrading the sovereign debt of Kenya earlier this week. David, really important context on a crucial story out of that region for us. David Malinga, thank you very much indeed on what we've been seeing out of Kenya and the prospects for that economy. Coming up, a Russian plot to assassinate the Rheinmetall CEO has been foiled by US and German security services. This is a fascinating tale with broad consequences. More on that story next. This is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
I'm determined on running, but I think it's important that I allay fears by let them see me out there. Let me see them out,
Joe Biden vowing to stay on in the presidential race, but two crucial gaffes at the NATO Summit deepen concerns about his mental and physical health. The yen whipsaws on renewed intervention speculation. That's after US inflation cooled to the slowest pace since 2021, with traders pricing in more than 2 cuts this year. Equity investors rotating out of big tech. And banks gear up for earnings season with Citi, JP Morgan, Wells Fargo reporting quarterly numbers later today. We are going to tell you what to expect. So, we have seen rotation out of the big name tech stocks. You saw the pressure coming through for the likes of Nvidia, for the likes of Meta, the semiconductors yesterday stateside. Nasdaq 100 ending lower by around 2%, but rotating into the small caps. The Russell gaining solidly, almost 3% on the Russell. So that rotation was pronounced yesterday. And to what extent is that a theme that it's going to continue to work its way across these markets? FTSE 100 futures pointing to gains of 0.2%. So the UK is set for a decent session as we lead up to the weekend, looking to add 18 points. European stock futures, though, are flat. S&P futures also flat, and a bit of downside pressure coming through for the Nasdaq after the losses of yesterday, pointing lower by 0.1%. Let's flip the board because the moves were quite pronounced at the 10-year on the back of that softer inflation data. Core CPI, importantly, coming at 0.1%. Very benign then, and building on the view that we are on a more sustainable path towards that 2% target for the Fed. And you saw yields down 7 basis points on the 10-year. The 10-year right now at 4.21. US dollar versus Japanese yen. The Japanese yen, intervention speculation. Did they lean into the Japanese yen strength of yesterday is a question. 159 right now, and we lead up, of course, just a couple of weeks away from that next meeting from the BOJ. Speculation they could raise rates again, of course. Currently, that currency up about 0.1%. Brent, $85 a barrel, and gold down 0.3% at 2,408. Now, the US has announced a new $225 million weapons package for Ukraine aimed at shoring up the country's air defense systems. The aid package comes as deadly Russian missiles and drones continue to hit Ukrainian cities. For more, let's bring in Bloomberg's Kriti Gupta. Kriti, thanks for joining us in the studio. Walk us through what this additional package means then, because there's been a flurry of announcements in terms of air defense systems from the US. Now we have this additional package. What are the consequences? What are the implications of this? How significant is this support from the US?
Well, in terms of the actual machinery that's getting deployed to Ukraine, it isn't that significant, because put this in the context of the previous packages that have come out of Congress, for example, $60 billion of Ukrainian aid, for example, relative to $225 million, specifically from the Biden administration, using a levy that's really only used for kind of executive powers. So in the broader context of things, this is far more symbolic than actually helpful when it comes to that Ukrainian aid story. But it is still crucial when it comes to what Vladimir Zelensky was asking for, which is more of that air defense story. Remember, this also comes as he's pushing for more F-16 fighter jets, for example, in the region as well, not to mention some sort of similar to kind of an Iron Dome defense system, basically one that would be able to target and detect any sort of Russian missiles coming into Kyiv or other parts of Ukraine, and then target them before they even hit the ground. That's something that he's been campaigning for, and something that the U.S. has been a little bit more hesitant to actually grant him, especially through congressional powers. So this feels like one more move for Biden to help out with.
And as we talk about arms shipments into Ukraine, we cannot ignore this fascinating story, disturbing story. Yeah. U.S. intelligence apparently picking up this plot, Russian plot, to assassinate the CEO of Rheinmetall, a crucial, of course, German company within the arms space, and a crucial supplier, not just for Ukraine, but for Europe as well. What do we know about this story?
Well, we know, and CNN reported this first, it's the kind of exclusive report coming out of them that basically says that a foiled Russian plot was detected, and that was targeting not only Rheinmetall, but potential other CEOs in the arms spaces as well. So not just Germany. Rheinmetall was the one that was ultimately foiled, but there were others being targeted as well. And this really speaks to your point about the kind of role that Rheinmetall has right now. Not only have they grown several times in the past 3 years since the war in Ukraine, not only for Ukraine, but for broader Europe as well. But the fact that they have been sending so many of those arms shipments to Ukraine is a problem for Russia. This is a bigger kind of story in the context of the NATO summit as well, because now it feels like this isn't just something like cold hard warfare where things are drawn out on the battlefield. This has to do with things like cyber attacks. This has to do with things like targeting the business aspect as well and CEOs. So this is getting into a much bigger way in terms of what is Russia Russia's strategy to kind of stop some of the aid and stop some of the even weapon shipments, but also other technologies that are coming to Ukraine and arguably broader Europe as well.
Yeah, I mean, as you allude to, this would be a significant gear shift in terms of the hybrid warfare that Russia appears to be imposing on Europe, or at least waging against Europe and its allies. Kriti Gupta, thank you very much indeed with that crucial story and, of course, the context around the additional support coming from the US and the Pentagon. Now, switching focus, Tesla shares fell after it postponed, fell a lot, by the way, down about 8%, after the company postponed the unveiling of its Robotaxi until October, pushing back that date then to allow more time to build additional prototypes. Let's get the details with our tech reporter Annabelle Drulers then, who's been following this for us. Annabelle, Musk staking a lot then on this Robotaxi. We know that the stock had gained on kind of building up to expectations and excitement around this. I guess the question is what we should read into this postponement, whether this suggests that the project is fundamentally flawed in some way, or whether this is just kind of tweaking the design towards perfection for Musk. What is your take?
Yeah, that's right, Tom. I think that is really the big question. I mean, they've delayed it perhaps by a couple of months to give the team a little bit more time to make some tweaks. But is that really the whole story here? Because we've seen, for instance, Elon Musk, someone who has a very strong belief and really believes that future of the Robotaxi, sort of making these timelines and then blowing right past them for several years now. So 2 months, or could it be a little bit more? There certainly seems to be a lot more work perhaps that needs to be done to the vehicle. And from people outside of Tesla, of course, there's a lot that we just don't know yet. I mean, is this a car that's going to be affordable? Is it going to have different features like a steering wheel, for instance? You know, there's just really a lot that is still to be told. And when you kind of look at the landscape around Tesla and around Robotaxis, you think about the likes of Cruise or Waymo in the US, they've been working very hard and spending billions of dollars on these projects to date, and they still haven't gotten that far. So it is that question really of the timeline. 2 months, or is it longer? And that caution really came through, as you said, in that share price reaction.
Yeah, I mean, talk to us a little bit more then, Annabelle, in terms of the market reaction, in terms of what we've been hearing from people, supporters, critics of Musk. What has the street been saying about all of this?
Well, I think it sort of just tempers the enthusiasm a little bit, because Tesla, we know, has been on this huge surge over just the past 10, 11 days alone. You're looking at gains of around 40% for the stock over the course of this year as well. It's just been that bet that Elon Musk would be able to have this sort of real-world breakthrough, a real-world application of AI that a lot have been really waiting for. But that is certainly priced into the stock because it's very expensive. It's one of the most expensive in the S&P 500 index. It's trading around 90 times forward earnings. So again, the Robotaxi being pushed back, it tempers that sort of enthusiasm. Not for everyone, that should also be said as well, because there's well-known bulls around the Tesla stock. Cathie Wood, for instance, is one of them from ARK Investment Management, and we spoke to her earlier today for her views on Tesla as well. Take a listen.
That just tells me that we're probably getting closer to this robo-taxi opportunity, not further away. He wants to show us something more, I think, awe-inspiring than we might have seen on August 8th. And he believes it's possible by October. And so, yes, that's, and what does that mean? It means that analysts will have to build into their models.
Oh, Cathie Wood, we know, is someone who is a long-time bull on Tesla and still managing to make bad news into good news for Tesla. But it is worth noting as well that Tesla is now the biggest or the heaviest weighting in its flagship ARK ETF, Tom.
Yeah, she certainly has skin in the game. And as you say, quite the art, spinning the bad news into the good news. Tech reporter Annabelle Drulers, thank you very much indeed on the latest when it comes to the Robotaxi out of Tesla and pushing that date back. We will, of course, count down to October then for Tesla and the details on that. Annabelle, thank you. Now, the leader of Samsung's largest labour union, sticking with tech, says their strike action is disrupting production. Son Woo Mok spoke to us about why workers have walked out.
저희가 임금 협상을 돌입하면서 Since starting the wage negotiations, Samsung has never negotiated properly. We haven't been able to get a good negotiation in 2023 and 2024. So if we're going to get a deal this time, we basically need a pay raise for our members. We are not asking for many things. The company unilaterally announced 3% increase, but we are asking for a little higher. 3.5%. There is no transparency about the bonus pay system, so there are many complaints from employees there. So we are saying, let's improve the system with transparency. And for the most important, holiday rights, we're asking for 1 day for the union's establishment anniversary. So if we can get a resolution here, I think that's something we can agree on. And I don't think that we're asking for anything unreasonable.
Your union has targeted production disruptions, but Samsung says that they haven't seen any production disruptions so far. How will you achieve your goals then?
We're getting a lot of reports from the field. Like in the 8-inch manufacturing, a lot of current shift workers, people who work in manufacturing, a lot of them are on strike right now. So we don't have enough people to manufacture on that line. It's a manual line, so it's not automated. So that's where you need people. And they're taking a lot of people out of the office right now. And I know that they're not responding properly. And in another line, I'm hearing that there's a lot of equipment that's shutting down, but they don't have the manpower to handle it. So there's a lot of equipment that's going idle. And when you're producing semiconductor parts, obviously you have to do inspections and things like that. And there's a lot of that backlog right now. So there's definitely going to be quality issues.
National Samsung Electronics Union head Son Woo-mok speaking to us from Seoul. In response, by the way, Samsung says it remains committed to engaging in good faith negotiations and is currently producing as planned. Now, SoftBank has acquired British semiconductor startup Graphcore. That's as the Japanese firm seeks to strengthen its investments in chips and artificial intelligence. Graphcore will operate as a SoftBank subsidiary and keep its management team. It is the second UK semiconductor company that SoftBank has snapped up. Of course, SoftBank took over ARM in 2016, the chip designer whose technology is found in almost all of the world's smartphones. And of course, that company listed in the US as well. Now, more broadly, retail investors withdrew £1.8 billion from UK equity funds in May, the worst month on record for the unloved sector. The figures from the Investment Association add to the dismal trend for British funds, which have seen 8 years of continuous retail outflows, totalling £54 billion. Coming up, President Macron's efforts to defuse France's political crisis, highlighting deep divisions and weighing on economic uncertainty. We're going to get the latest then from Paris. That is next. This is Bloomberg.
I'm very confident for next week. So we are collecting now support among the other political families. As EPP, we are the winner of these elections. We gained seats. We won again these elections. And we nominated beforehand, before the elections, Ursula von der Leyen as our Commission President candidate. So it's also a very democratic approach how we do things. We show in transparency what is our content and what is also our lead candidate for the future. And now it's up to deliver. And we want to have a democratic Europe. That's why the European Parliament should really support the lead candidate from the biggest political family, that's the EPP.
And, I mean, when we talk about having support and delivering, I mean, do you think that you have support, for example, from the Greens? Have they indicated to you that they are willing to support Ursula von der Leyen?
We have also on council side a clear commitment between the three main political groups in Europe. That's the Christian Democrats, my party, the EPP. We have the Social Democrats and we have the Liberals on European level. Probably also linked to the big leaders. We have Olaf Scholz, we have Emmanuel Macron, we have Donald Tusk. They are representing all the political families of Europe. And they agreed together with the parties that we have a common package to create stability for Europe. After the elections, Europe must be grounded on the stability in the center. That is what Europe needs in this moment of time. I am happy that we reached this agreement with Costa on the council side, with Kaja Kallas on the High Representative, and with Ursula von der Leyen as next Commission President. And next week we have to deliver as parliamentarians on this kind of key promise. We have so much uncertainty, so much instability all over the world. Look to America, what is there, what are there the discussions. That's why I think it is our task now to create stability in Europe.
That was Manfred Weber, the president of the European People's Party, speaking to us exclusively. Staying in Europe then, French President Emmanuel Macron's shock decision to call elections after Marine Le Pen's party made gains in EU voting did not, of course, result in a far-right government, but it did lead to a hung parliament that could prove challenging for financial markets. So why did Macron take the gamble, and what happens now?
It was an historic gamble.
Emmanuel Macron calling a snap election following his party's crushing defeat in Sunday's European Parliament elections.
And it surprised everyone. And just a month later,
we have a hung parliament scenario. This is the first time no one is gaining an absolute majority in the National Assembly.
So why'd Macron risk it in the first place? It was a dangerous election a president didn't have to call and would trigger panic in the country's vital bond market. So what sparked Macron's great gamble? And what does the outcome mean for Europe's second biggest economy?
Let's get more then from Bloomberg's EMEA Markets senior editor, Phil Serafina, standing by for us in the French capital, Paris, of course. Phil, thanks for joining us. Where do we stand then in terms of the process of forming a government? Has any progress been made?
At this point, Tom, we're 5 days on from the election, and it looks like no progress has been made. We're basically looking for a couple of developments in this story now. Number one could come as soon as today. The left-wing alliance, the New Popular Front, they won the most seats in the assembly. They say that gives them the right to first shot at forming a government. But the problem is they can't even agree among themselves. That's a bunch of parties that runs from the socialists and the center-left to the far-left France Unbowed. They can't agree among themselves on who to propose to Macron as prime minister. They said they wanted to get that done this week. They wanted to come up with a name. Here we are Friday, the end of the week. We'll see if we get any word from them on who that's going to be. The other thing that's on the schedule is next Thursday, the newly elected National Assembly will be in session for the first time. So that may crystallize minds a little bit and get people focused on forming some sort of coalition that can form a government. Keep in mind, Macron said this week he wants the centrist parties, his own group, the center-right Republicans, the center-left socialists. He wants them to form a government, some sort of broad coalition government, leave the National Rally off to the right and the France Unbowed off to the left. No extremes, just the center. The problem with that is those parties are not talking among themselves, and they're not even talking about talking. So it seems hard to see a resolution of this in the next couple of days.
OK, not even talking about talking. Look, Phil, you nod to some of this, but just to kind of expand on it a bit for us in terms of the detail. What are you and the team watching for then, just in the next few days and weeks ahead in terms of how this could all shape up?
Well, I think concrete proposals. What we've seen this week is basically TV interviews, newspaper interviews, where heads of various parties say what they won't do. You need to see that rhetoric turn around and people come out with concrete proposals for, we could work with this party and, sort of the contours of a coalition. Without that, it's just talk at this point. So that's really what we're looking for, concrete proposals.
OK, concrete proposals, and we keep an eye, of course, on the market reaction to all of this as well. Phil, thank you very much indeed in terms of setting us up on what has or hasn't been achieved so far in terms of attempts to form that new government in France. Bloomberg's EMEA Markets senior editor, Phil Serafino. Coming up, 2 days until the Euro 2024 final. But it's not Spanish or English advertisers spending big this year. We'll tell you who is and why. We're talking football and business next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. The England men's football team, of course, taking on Spain in the UEFA Euro 2024 final in Berlin on Sunday, 8 p.m. UK time. Leading Chinese companies, by the way, taking advantage of the advertising exposure with a significant advertising presence at the event. Let's cross over to Catherine Lim, Senior Consumer and Tech Analyst and Head of Bloomberg Intelligence APAC for that region. Thanks so much for joining us on this. I was at an event last night, or the night before last, I should say, with a number of CEOs and executives. They were all sitting there. We were watching the game. England versus the Netherlands, and they were all commenting less on the football and more on the advertising, the likes of BYD and Alibaba. I thought it was really fascinating. Well, Alibaba's been a big player in terms of the advertising push at this competition, at Euro 2024. What does that tell us about their ambitions in Europe, and why use this platform?
Right, you know what, definitely, Ton, we've actually seen Alibaba leveraging on advertisements and, campaigns through multiple platforms to tap into, users and viewers at the UEFA Euro 2024. So in the last 4 weekends, we've actually seen downloads for their apps going up, which is great news. And we've actually also seen the weekly active users rising on a year-on-year basis. And in the latest weekend, we're talking about 133% year-on-year growth, which is great. Now, of course, notwithstanding, they are looking to actually tap into, the European markets, which is a, very affluent online shopping mix that could actually help drive more of their international business sales. And that is what we are looking for them to actually retain this momentum over the next couple of weeks. And, hopefully by next month when the company reports results, we'll be able to actually see some signs of that.
Yeah, and of course we have the Paris Olympics coming up as well. So really interesting in terms of what this means, the advertising for the domestic audience in China, where of course there is a big viewership base, but also maybe trying to push that branding into Europe as well. Catherine, before we let you go, of course, the crucial question is, give us a scoreline. England, Spain, Sunday. Who are you going to be backing?
Well, Tom, I'm going to answer it this way. Look, I saw Watkins, got that goal in live. I was off to an early morning start. It was a beautiful morning. So let's see what happens, Sunday or Monday morning, my time here in Asia. And fingers crossed on that.
All right, Catherine, I'm taking from that you are definitely a Three Lions fan. So thank you very much indeed. We'll be watching Watkins. It's a new national hero. Catherine Lim on the consumer front in terms of the advertising story around the Euros. Consumer technology senior analyst for Bloomberg Intelligence. Really appreciate it. The opening trade is up next with me, Kriti and Anna. Stand by for that. Plenty more great conversations on these markets and potentially a bit of football as well. This is Bloomberg.